Intelligence Report, July 18, 2026. Geopolitical and Macroeconomics. The United States-Iran fight over the Strait of Hormuz remains the dominant risk tape. Reuters reported the United States military completed a seventh consecutive night of strikes on Iran. Iran renewed attacks on Gulf states. Iran struck Saudi Arabia again for the first time in months, with oil prices jumping roughly 3 to 7% on the move and Bitcoin wobbling under the shock. United States strikes hit Iranian military targets and damaged civilian sites in Hormuzgan province. Bahrain sounded air sirens as the exchange intensified. A sanctioned tanker continued leaking oil near Oman on satellite reads. Suspected pirates had already seized a tanker off Yemen in the Gulf of Aden on the prior session. Soft United States housing data lingered in the backdrop. Single-family starts fell and building permits hit a 10-month low, while Trump threatened to layer wildfire pollution costs onto Canadian tariffs and China vowed measures after the United Kingdom nationalized Chinese-owned British Steel. Germany raised its domestic security stance to a high threat level. The macro split is still war and shipping tails plus energy spikes versus mixed growth prints and chip/AI equity volatility. General crypto market. Bitcoin spent the window fighting mid-60,000s pressure after Iran and semiconductor risk-off. Session reports put price under about $62,500 into the Iran stocks wave, near $63,000 on the blocks tape with the Coinbase premium negative for a record 60 days. Then Yahoo Finance's 18 July print showed a recovery band near $63,900 to about $64,070. Spot Bitcoin ETF demand re-accelerated on the last completed United States session. Farside shows about $181.1 million net inflow on the 14th of July, about $107.7 million on the 15th, about $79.1 million on the 16th, and about $132.3 million yesterday. Institutions are still bidding dips even as Hormuz oil spikes and AI chip beta keep chopping risk appetite. Recent X posts from key accounts at Stellar.org continued the MoneyGram Tier 1 validator push with a dedicated MoneyGram join post and prior 3 validator welcome. MoneyGram, figure, range, highlighted the Stellar consensus protocol and proof of agreement model. Validators must be trusted by others, not pure proof of stake. Amplified open public financial system /X402 messaging from prior days. Traditional finance plus crypto convergence. Bank of America named Sonali Tyson head of its global digital assets platform and Kevin Milsom head of AI transformation. An explicit bridge between crypto rails, AI ops, and the bank stack. CoinDesk frames Stripe and Swift racing to control next-generation global payments infrastructure as both lean harder into digital dollar and messaging rails. HSBC won Bank of England approval for HSBC Orion to enter the digital securities sandbox, with a first digital gilt instrument targeted for first quarter 2027. SBI's CoinHako majority close and Asia tokenization map, including Ondo, stayed in the tape. The Defiant added EDX markets about $76 million Series C led by SBI Holdings for an institutional venue with its own central clearinghouse. eToro took a strategic stake in on-chain perps exchange extended and flagged a Zengo self-custody tie-up. OKX launched tokenized United States stocks on a shared order book, backed X stocks. United States and EU traders barred, and OKX Europe added USDT to MiCA-compliant USDC conversion. Galaxy Digital locked a 15-year Texas Tech Stadium naming deal, reported worth more than $70 million, as a West Texas Power and Land brand bet. Bitmine added about $73 million of ETH, lifting holdings toward about 4.8% of supply on company updates. ECB Cipollone warning that stablecoins can drain bank deposits. Digital Euro pitch remains the European counter-narrative. FTX's fifth creditor wave is set to distribute about $900 million after nearly $10 billion already paid. These moves generally reinforce regulated distribution and tokenized market plumbing even while spot beta stays hostage to oil and chips. Regulatory developments. Clarity is losing prediction market confidence. CoinDesk reported Polymarket cut year-end passage odds to about 32%, a record low for that market, as Senate ethics negotiations drag. Senator Warren asked for 2026 reporting on Trump-linked crypto earnings after an about $1.4 billion disclosure, with market structure timing still politically entangled. France's gambling regulator ordered ISPs to geo-block Polymarket over illegal gambling and manipulation concerns. Another sovereignty hit for on-chain prediction venues after the CashApp federal versus state fights. MiCA pressure continues to reshape Europe's stablecoin shelf. OKX Europe's USDT to USDC path. Enforcement and security. Kaspersky detailed the GitVenom framework, hundreds of fake GitHub repos and AI-generated docs aimed at crypto investors. Consensys disclosed it had unknowingly taken on a North Korea-tied developer via a third-party introducer. United Kingdom courts prior fake police crypto scam jailings stayed in the recap set. Rails progress outside Washington remains faster than United States market structure law. DEFI and RWA tokenization. Constructive stack. OKX tokenized stock shared books. Tokenized stock lending TVL still small at about $23 million on token terminal reads, even as QQQ/SPY trackers see more on-chain collateral use. HSBC Digital Gilt Sandbox Path. SBI EDX Institutional Clearing Capital. eToro, Extended Perps. Bitmine's ETH Treasury ad. Risk and attrition. Summerfi said it will wind down after 7 years citing an exploit. Ave Stani called it an OG access point. Near House of Stake passed HSP 027 to scrap developer gas rebates so all gas is burned. Hyperliquid-listed memecoin CashCat collapsed about 75% from peak after a violent perp wick. Prior Ostium vault drain and Oracle design scars still color risk management. Institutional RWA and tokenized equity experiments keep advancing while consumer DeFi interfaces and incentive designs remain fragile. AI and blockchain. Moonshot's Kimi K3 continued to dominate the AI risk tape, topping key coding and creative benchmarks versus Claude and GPT class systems and feeding the semiconductor route that dragged crypto beta lower. Reuters flagged chipstock pullback worries about AI rally strength and leveraged trades. NVIDIA locked in as first customer for HBM4 memory, relevant to both AI clusters and GPU-adjacent mining/infrastructure economics. Google shifted Gemini apps toward compute-based usage quotas, squeezing power users. Bernstein reiterated crypto-style perps and prediction products already price AI compute ahead of planned CME and ICE GPU futures later in 2026. CIA Director Ratcliffe's comments on AI drones compressing recruit survival times, with crypto funding channels for UAV procurement on the Russia side, underline how agentic systems and open capital rails now touch kinetic conflict. Open models plus agent payments plus compute derivatives remain multi-year infrastructure, and still a same-day Bitcoin beta input when chips gap. Prediction markets. Product demand stays high while legitimacy and jurisdiction risk rise. Polymarket's Clarity year-end odds fell to about 32% on Senate ethics stall. France ordered ISP geo-blocking of Polymarket. Prior CashApp teleprompter/mention market, integrity shock, and CFTC orders around Michigan state court trade cancellations remain live overhangs. Crypto briefings war-linked contract prints, Iran invasion before 2027 near 27.5%. Gulf state action windows in the low to mid-50s% on secondary reads show how fast geopolitics is being booked on-chain. Design risk, cross-border gambling rules, and federal versus state authority are still the structural story beneath volume. Risk/opportunity analysis. Risks. Seventh night United States, Iran strikes plus Iran-Saudi hits can keep oil elevated and risk assets defensive. Hormuz/Gulf infrastructure damage is no longer a one-day headline. Bitcoin's path is choppy mid-60s with a record 60-day negative Coinbase premium, even as ETF prints improved on 17 July. Clarity at about 32% on Polymarket makes a clean pre-recess United States market session. United States market structure win less likely. France's Polymarket block and ongoing CashApp jurisdiction fights threaten prediction market distribution. DeFi attrition and North Korea developer supply chain risk keep operational security elevated. AI model shocks and chip deleveraging can re-hit crypto beta without a crypto-native catalyst. Opportunities. 17 July spot Bitcoin ETF net inflows of about $132.3 million reversed the midweek taper and show institutions still add on weakness. BofA Digital Assets Leadership, Stripe Swift Payments Contest, HSBC Digital Gilt Sandbox, SBI EDX Clearing Capital, OKX Tokenized Stocks, and Galaxy's Real Economy brand deal form a dense TradFi crypto stack. Stellar's MoneyGram Tier 1 validator expansion and proof-of-agreement messaging keep brand-relevant rails visible. Messier-driven USDC rails in Europe and BitMinescale ETH treasury accumulation support the regulated digital value map over pure leverage theater. Recommendations. Short-term, track WeatherBit.coin holds the $63,000 to $65,000 band against oil spikes and Hormuz transit/infrastructure headlines. Confirm whether the 17 July ETF inflow extends into the next full United States session. Watch Clarity Ethics Optics versus Polymarkets about 32% print. Midterm, follow Senate market structure text and recess calendar. France and broader EU prediction market enforcement. HSBC Digital Gilt Go Live path into 2027. OKX and EDX institutional tokenization traction. Stellar validator set and RWA follow-through. AI compute derivative migration towards CME/IC. Long-term, favor intersections of bank-distributed stablecoins, tokenized securities with real transfer agent or sandbox rails, open agent payment standards, and multi-jurisdiction RWA settlement. BofA, Stripe/Swift, HSBC, SBI/Stellar institutional validators over short-term price theater. Key metrics to watch. Bitcoin path versus $62,500 to $65,000 after the Iran oil shock and partial reclaim near $64,000. United States spot Bitcoin ETF daily net flows after the about $181/108/79/$132 million four-session sequence. 18 July is not a full session print. Coinbase premium duration after the record 60-day negative stretch. Clarity Act ethics language and Polymarket year-end odds around the about 32% low. Oil, Hormuz transit counts, Iran, Saudi/Gulf infrastructure escalation, France Polymarket geoblock enforcement and Calshire federal state outcomes, HSBC digital securities sandbox milestones, OKX tokenized stock volumes outside United States/EU, Stellar Tier 1 validator set growth and XRPL active address/new wallet prints, semiconductor and HBM supply news as a leading crypto beta input, GitVenom/DPRK developer supply chain incident follow-through across major crypto firms. This is not financial advice. This has been your daily market intelligence report for July 18, 2026.